Good evening. Thanks for joining us. Happy St. Patrick's Day. This is NTD Business, and I'm Paul Graney. More of the same from Jerome Powell at the Fed, but it looks like he'll let Treasury rates rise. And Powell also announcing interest rates to remain low until at least 2023. So how can your retirement fund manager preserve your savings? And Morgan Stanley will start giving its clients access to Bitcoin. It's the first big US bank to do so. But not everyone qualifies. That and much more coming up at NTD Business. A new Bank of America survey says investors are now more worried about inflation than the CCP virus. 37% of global fund managers say higher than expected inflation is the biggest tail risk for investors. A close second with 35% is so-called taper tantrums. This is a sharp sell-off in the bond market driven by fears that faster economic growth will drive inflation even higher, leading the Federal Reserve to raise interest rates. Virus fears dropped from top spot in March down to third place in February, with fewer than 15% of fund managers saying that this is the biggest risk. What a difference a year makes. The rise of inflation fears come as Wall Street looks beyond the pandemic. It's now shifting its focus to the impact of that tidal wave of stimulus and the unleashing of pent-up demand as the economy recovers. But Fed Chairman Jerome Powell isn't worried about inflation. He announced today that the Federal Reserve will keep its Fed funds rate at near record low levels until at least 2023. Keep the printing presses running. Good news for the government, they can keep borrowing money, cheap money, and good news for the stock market, it rallied on the news. But bad news for your savings, they're being inflated away. But Powell didn't address rising Treasury yields, something the Fed has less control over. Higher Treasury yields make mortgages and other loans more expensive, and in the Fed's eyes, that could slow down the economic recovery. So we were all waiting to hear if the Fed would step in and buy more Treasuries to keep the rate down, but Powell didn't mention it. So I asked FX Street's senior analyst Joseph Trevisani how the markets reacted overall.
I think the markets took it pretty well. What we've seen over the past 3 months has been an increase in U.S. Treasury rates at the farther end of the curve. We've seen a steepening of the curve. That happens in a situation where the economy is expected to get better, and in fact, the economy is getting better. So that much hasn't changed. Mr. Powell said that the dot plot and the projections, which of course the Fed does not consider projections or forecasts, shows a range of approaches to this. They're not projections, they're not forecasts. And they still show that the Fed funds rate will remain unchanged through the end of 2023. Well, the equity response to that, of course, was very pleasant. Equities went up. Currencies took it as a bit of a negative. The dollar came off a little bit. But the specific fact which I think is the most important fact of the economy right now, is that the steepening yield curve does not seem that the Fed is going to block it, which the Fed could do. Chairman Powell could say something about it, or they could actually go into the markets and put more pressure on the farther reaches of the curve. They're not doing that. So I think that tells you that the Fed is pretty confident that the U.S. economy can stand higher commercial rates, which key on the 10-year and other rates at the farther end of the curve.
How about all these worries that we heard in the last few weeks of, if the Treasury yield increases by another 50 basis points or 100 basis points, then we're going to see a big sell-off. There's going to be mass chaos in the streets. You think, is this still legitimate, or?
Well, I think markets love to speculate about things that are going to happen, but people are not going to do that. Let's put it this way. If Treasury rates rise another 50 points, the reason they're rising is because the U.S. economy is strong. The Treasury market is keying on U.S. statistics, on what we're seeing actually come out of the economy. So it would actually be a reflection rather than a cause for concern. And if the U.S. economy is strengthening, then it's hard to see why the equities would sell off from a mere half-point rise in, say, the 10-year. If you look at the 10-year historically, it's been much higher than this for many long periods of time, very recently, not going back to the days of Paul Volcker. So I don't think that's a realistic concern.
You emailed something out recently. Can the real American consumer please stand up? Something like this. We look at the recovery, okay,
Yes.
but if we compare the kind of stimulus boosted retail sales in January to the really lax ones in February, and I think looking at March, it's even worse again. So in order
Right.
to keep, how much of this recovery is real and how much is artificially stimulated?
I think the January, I take a double view of this one, because if you look at the size of the increase in retail sales, just using that as a parameter, in January, it can't be just a $600 stipend sent out to many families in it. It was much more than that. So I think that you will get that type of response throughout the year, because you think of it as a mini roaring 20s, the kind of emotional translating into economic release that happened after the end of the First World War. I'm not making a comparison here, but it's the same type of change in outlook. And I think that will be reflected. So although it seems that it's very much supported and even sponsored by these simple and short-term stimulus payments, I think it will continue through. So many things that people have done as part of their normal lives have been either short-circuited, curtailed, or simply haven't taken place over the past year. And some of those things will take more time to recover, but I think recover they will if we continue along the path that we are right now. And I think that consumption boost continuing through the year is a lot of what equities and growth is being based on.
A lot to look forward to then. Joseph, really appreciate it. Thank you so much.
Thanks a lot.
So it's been exactly a year since the Fed cut rates to near zero. Wants to make money cheap so governments and others can spend it, spur the economy. It's the idea. But easy money devalues the money that you worked hard to get. That's what retirement fund managers are worried about. How do they preserve your savings while the Fed runs the printing presses? NTD's Con Fredrickson reports.
With regard to interest rates, we continue to expect it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate.
The Federal Reserve says keeping interest rates low will spur economic activity. But what are the long-term consequences for your retirement savings? Does it make things harder for your financial advisor?
It's very difficult.
Bonds are traditionally a low-risk way for fund managers to invest your money and hedge against stock market risk. But
Well, with rates so low, I mean, historically low, and by historic, we're talking about since the birth of the United States in the 1700s, there's very little cash flow that they spit out.
so fund managers like RIA need to invest more in things like strong companies with dividends or other fixed income funds. But this is much riskier than investing in bonds.
Fund managers who do have pension plans and have to get a certain rate of return, that's a high hurdle. But if they're invested in the stock market, which they're continuing to do, they're making it.
They're making it since the Fed cut rates last March, that's true, but stock market valuations are now at historic highs. So many are asking if it's a bubble that could burst. There's also the threat of inflation. The Fed and the government have printed trillions of new dollars in the past year, devaluing your savings. So your fund manager needs to somehow ensure your dollars maintain their purchasing power until you retire.
Inflation is going to rear its ugly head. And once it does, that it's going to start to spiral out of control. It's going to start quickly. It's going to jump and it's going to jump and it's going to jump again.
The Fed chairman says he's not worried about inflation and is encouraging the government to print and spend more. Colin Fredrickson, NTD News.
And even though the Fed wants to keep rates low, mortgage rates are rising anyway, probably down to inflation fears. And this is cutting into mortgage demand. Applications fell over 2% last week from the week before. Refinance applications even fell as well. They're nearly 40% lower than they were a year ago. The 30-year mortgage rate is now at its highest level since June 2020. Despite the rise, it is still near record lows. Home construction also fell. February construction was down 10%, could be because of severe weather supply shortage and rising lumber prices. National Association of Home Builders says the lumber price surge is adding $24,000 to the average price of a newly built home. Expensive wood. And President Biden says he plans to raise the federal income taxes on those making over $400,000 a year. He says Democrats are all for it. Tax the rich. Here he is in an interview with ABC.
Yes, anybody making more than $400,000 will see a small to a significant tax increase. If you make less than $400,000, you won't see one single penny in additional federal tax. But let's talk raw politics.
The tax hike will likely face Republican opposition, but Biden says he'll get Democrats' votes anyway. He also says bringing up the income tax rate from 37 to 39.6% would raise $230 billion. But critics say this plan would result in lower wages and less investment income for middle-class Americans. And talking of easy money, stimulus checks are on the way. About 90 million payments have been disbursed so far. The first group to get the money includes people who provided direct deposit information to the IRS on recent tax returns or on the IRS website. Hope you did it. About 150,000 paper checks have also been mailed. In all, about $242 billion have been paid. Individuals earning under $75,000, married couples making less than $150,000 get the full amount, $1,400 each. Look forward to it. You can check the status of your payment using the Get My Payment tool on irs.gov. In market news, the Dow, S&P 500 closed at new records today. The Dow rose 189 points, 0.58%. S&P 500 gained 11 points, 0.29%. The Nasdaq climbed 54 points, 0.4%. As we mentioned, the 10-year Treasury yield was near 1.7%, eased back a little later. The Fed upgrading its economic projections, saying the economy would grow 6.5% this year. Homebuilder Lennar jumped nearly 14% after strong earnings, but hydrogen fuel cell company Plug Power lost 8%. Says it'll have to restate financial statements because of accounting errors. Cryptocurrency exchange Coinbase has been valued at $68 billion ahead of its IPO. The eye-popping valuation comes as Bitcoin prices rocket to the moon this year. NTD's Patrick Hayden reports.
The largest US cryptocurrency exchange, Coinbase, said Wednesday that recent private market transactions value the company at around $68 billion. That's ahead of its planned stock market listing. The whopping valuation underscores how the perceived value of Coinbase has rallied with the surge in the price of Bitcoin. A filing shows that current valuations of its shares are nearly $344 apiece. That's up from last year's third quarter value of around $29. That's a nearly 13-fold jump in its valuation in just a few months. The latest filing from Coinbase also signals heightened confidence that the listing will be approved by regulators. If it's approved, it will be a landmark victory for cryptocurrency advocates. Patrick Hayden, NTD News.
And then another big boon for the Bitcoin bugs. CNBC says Morgan Stanley will start offering its rich clients access to Bitcoin funds. It's the first major U.S. bank to do it. The bank said it would launch access to 3 funds allowing ownership of Bitcoin, but there are conditions. People need to have at least $2 million in assets held by Morgan Stanley, and for investment firms, they need to have at least $5 million. Morgan Stanley will also limit Bitcoin investment to 2.5% of investors' net worth. Bitcoin's price, of course, extremely volatile, and the bank says only people with, quote, aggressive risk tolerance would be suitable. You one of those guys? Are you tired of living in the city? If you're a professional looking for more space, affordable homes, and easy access to the outdoors, this might just be your opportunity. Dozens of U.S. cities are now paying remote workers to move to their communities. NTD's Phil Zoe has the story.
Cities across the U.S., including Buffalo, New York, Savannah, Georgia, and even Honolulu, Hawaii, are paying remote workers to move to their cities. The offers can go up to $16,000 on the high end, ranging from cash incentives to tax credit and forgivable loans. MakeMyMove.com has compiled over 30 offers where you can review the programs, requirements, and even apply. So far, interested remote workers tend to come from expensive areas and often work in tech, sales, and marketing. The company said remote workers are extremely valuable because the new cities will get the workers' tax revenue and spending in the community. A program in Chattanooga, Tennessee is attracting software engineers with $10,000 towards a new home. Tulsa, Oklahoma is offering cash and memberships to co-working office spaces. For short-term relocations, Honolulu is offering a free flight for a 1-month stay. Applicants will have to volunteer at least 15 hours at local startups and nonprofits. Phil Zhou, NTD News.
And supply chain chaos. Honda is forced to halt production at many of its U.S. and Canadian auto plants. Flora Bradley Watson reports.
Honda announced late Tuesday it was halting production at most of its plants in the US and Canada. The Japanese carmaker said the suspension would start from March the 22nd and last a week. Honda cited the global health crisis and its impact on supply chains as a reason for the move. A shortage of microchips, congestion at ports, and the fallout from severe winter weather have all hampered operations. In a statement, Honda said the timing and length of production adjustments could change, adding that workers will continue to have the opportunity to work at the impacted plants. Honda typically produces about 30,000 vehicles a week in the US and Canada. It's not the only car maker to be affected by a shortage of microchips. General Motors, Volkswagen and Ford have all had to cut production, with warnings that it could shave billions off their earnings.
Toyota and Volvo are also cutting production, citing supply chain issues. Still to come, Disney's CEO sets a date to reopen California's 2 Disney parks. It follows new state guidelines. And businesses in the UK turn to crowdfunding to survive the country's 3rd lockdown. One platform says its donations have tripled from last year. That and much more coming up after the break.
If you're like me, and I think it's actually most of us, then you're getting really fed up with the nonsense going on inside the banking system. I mean, we've worked hard our entire lives to retire comfortably. We just recovered from the crash of 2008, and it seems like it's about to happen all over again. Look at the too-big-to-fail banks. They're only getting bigger as the Fed hands them trillions of dollars daily, while simple folks like you and me, we're only getting the short end of the stick. That's why I'm glad I found this book called The Bank Failure Survival Guide. Give us a call, and we'll send you a free copy with no obligations whatsoever. Just one American to another, telling you about some options that you might not have considered. Call 866-239-2619 today for your free copy of The Bank Failure Survival Guide. That's 866-239-2619.
When you look at TV networks in America, a soundbite and fight-it-out culture prevails on news and commentary programs. As a Canadian, I'm fascinated with America, and I wanted to offer American thought leaders an opportunity to share their thoughts in a deep dive format, where we can explore their ideas together. And so American Thought Leaders was born. The world's most brilliant thinkers believed that open discourse was the key to greatness. However, all around the world, we see that discourse is being stifled, and political agendas have subverted media. The Epoch Times launched its Global Thought Leaders program to bring back this great tradition of free thought. As the host of American Thought Leaders, every week I interview some of the most intriguing minds on the most pressing issues of our time. Be sure to check out our new episodes every week.
Disney's CEO says its 2 theme parks in California will reopen on April 30th, but they'll only be at 15% capacity. Walt Disney World in Florida already opened 9 months ago. The CEO told CNBC there's no shortage of visitors at the Florida location. The California parks can open with proper health precautions too. California's new guidelines allows theme parks to open with between 15 and 35% capacity depending on local virus spread. Disney's had to slim down its workforce over the past year, affecting tens of thousands of jobs. 15%, wow. Most of the time, the idea is to stay out of prison, but it's the defunct prison Alcatraz and it's open for tours. Well, that's a different story. The shuttered federal penitentiary in San Francisco Bay hasn't housed prisoners in decades, but it was a popular tourist destination. That is, until a CCP virus hit. Well, the foreboding historic island prison is now reopening for indoor tours for the first time since the onset of the pandemic. Mask requirements, social distancing, and other health precautions are in place for all visitors. But despite reopening, Alcatraz will host far fewer guests than normal, and ferries to the island will run a reduced capacity. Hope it's more than 15%. The prison opened in August for outdoor-only options, but officials closed it again in December. Alcohol-free bars are opening across the United States. The surge is responding to a growing number of people experimenting with sober living. That's as health and wellness trends like Dry January, Sober October gain traction. NTD's Andrew Thomas has the story.
There may be something missing on St. Patrick's Day from a new kind of bar in the U.S. Booze. Aimed at the growing number of people exploring sobriety, alcohol-free bars are serving cocktails without the extra kick. At Sans Bar in Austin, customers are enjoying live music and drinks, like Rosemary Ginger Mules and non-alcoholic IPAs.
A lot of people just want to drink less. A lot of people are just wanting to socialize without having the hangover, or without having any alcohol, or less alcohol.
Sober bars aren't a new phenomenon. They first appeared in the 19th century as part of the temperance movement. More recently, abstinence challenges like Dry January and a growing interest in health and wellness are credited for the trend. An explosion of new products is also fueling sales. Chicago's Ritual Zero Proof, which opened in 2019, makes no alcohol whiskey, gin, and tequila. Beverage behemoth Anheuser-Busch introduced alcohol-free Budweiser Zero last year. Douglas Waters opened Spirited Away in November, a New York store that sells non-alcoholic beer, wine, and spirits.
For a lot of people, soda and juice meet their needs if they're not drinking, but a lot of people also want something that feels a little bit more grown up.
Many of his customers are sober, and others are pregnant or have health issues. Some are training for marathons, while some just want to cut back. Andrew Thomas, NTD News.
Pubs and restaurants in the UK are turning to crowdfunding to stay in business. One UK-based platform says it's seen a huge increase in donations over the past year. NTD's Evelyn Lee reports.
Faced with a CCP virus outbreak and a dispute with their landlord, the India Club restaurant in London saw its future threatened. So it launched an online crowdfunding campaign in January. So far, it's raised over £45,000 or $62,000.
It's really shown, I think, human kindness in these really tough times because it's a difficult time for everyone.
She saw donations not only from old-time customers, but even from people in Australia who had never visited the restaurant but were moved by the story.
It was set up in the 50s and it's always meant to be a place of friendship between India and Britain. So it's so much more than just a restaurant and a bar. So we really do feel a responsibility to carry it on for future generations.
And they're not the only ones. The Lamb Pub in North London also turned to crowdfunding. A successful campaign brought the pub, which is over 140 years old, back from the brink. It raised nearly £25,000 or $35,000.
We knew that would be light at the end of the tunnel eventually, and to be unable to continue operating the pub when we knew that in a few months' time it would be back to normal would have been terrible.
UK-based crowdfunder says over $60 million have been raised on its site since last March. That's about a 230% increase from the year before. The Lamb Pub's landlord says thanks to crowdfunding donations, the pub should be able to survive until they can reopen in May. Evelyn Lee, NTD News.
And over in the Emerald Isle, 500 drones took to the skies above Dublin, Ireland to celebrate St. Patrick's Day. They weaved into different shapes and changed colours as part of a show called the Orchestra of Light. Festival designer Aidan Grinnell choreographed the eye-catching designs. Around the world, St. Patrick's Day celebrations are a little quieter due to the pandemic. New York City's normally huge St. Patrick's Day parade had few onlookers in attendance and was designed this year mostly for a virtual audience. 670 landmarks in over 60 countries across the world will also light up green to celebrate. And that's the latest business updates for today. You can still catch NTD Evening News with Stephanie Cox at 6:30 p.m. Eastern. For NTD Business, it's all for today. Thank you for watching. We'll see you tomorrow.
Don't miss out on important news. Our videos are being deleted. So if you don't want to be cut off from honest news, take a moment to sign up for our newsletter at newsletter.ntd.com so you don't lose access to NTD. Go to newsletter.ntd.com to sign up for our evening newsletter.